Welcome in, guys. What's going on? You are in the crypto future. What's happening, man? Whew, quite a day, quite a day. I just had something dropped off from Amazon, so I had to go to the front steps there. And holy smokes, is it crisp? Is it a crisp afternoon? Holy smokes, blow the hair right off your arse, I'll tell you. Okay, let's get into it here. What do we have? Bitcoin still inside of a bear flag, guys. My projected target on this breakdown, right into this golden pocket down here between 72 and 74K. I do believe we will see that breakdown. We've fallen back below the 30-day moving average here, as you can see. We managed to hold it as it was resistance for 4 days out of 6 days. Then we broke above it. We held it as support for 3 days, and now we're back down below it again. I figure a close below it, we're probably going to start to see that breakdown finally out of this bear flag. And yeah, so it's not going to drop instantly down to 74K. It's going to work its way down, but I do think we're going to lose 90. We're going to come down around 86, 85, 86. We'll probably try to find support around 84,640, but we'll continue downwards, right? So that's what I'm watching for. That's what I'm watching for. We got one super chat to start the stream. James Town says, Rob's a smart guy. I'm only speaking the truth. Well played, sir. Well played. I see what you did there. I see what you did there. Nice. All right. What else do we have? Paul, good to see you, brother. Good to see you. Hey, Rob, is Kraken Exchange great for trading ZBEC? I guess it depends on where you are. If you're in the States, Kraken is a decent centralized exchange, yes. Yeah. I don't do any of my trading over there. I spot buy and stuff like that, but I wouldn't do any of my trading there. Perez, what's up, man? Smashing the like. Let's go. It's a me, Mario. Good afternoon, Senior Rob. Oh, the crowd is split pretty good on the next move. Let's check the poll. What do we have? So I asked on the poll, guys, what comes first, 96K Bitcoin or 74K Bitcoin? The relevance of 96K is that there's a CME gap up at 96K, but there's strong resistance at 94K that we can't seem to break through, right? So I asked what comes next, 96 or 74? And pretty close, guys, 54 to 46 in favor of 96K Bitcoin. So we'll see how the poll continues to progress as the stream continues on. What do we got? Candyman, my guy, what's happening? Before we work on artificial intelligence, why don't we do something about natural stupidity? Hey, I could not agree more with you there, brother. Absolutely. There's a whole lot of dumbasses that need to be educated before we can move on to artificial intelligence. How about we get human intelligence first? Quentin, what's up, brother? Good to see you, man. Danny's in the house. Guys, make sure you hit the like and subscribe on the way in. We got 115 people watching. We have 31 likes. Let's get it up to 100, guys. You could do it. Put your back into it. Are people starting to lose their marbles? Yes, people lost their marbles a long time ago. I had another person have a little bit of a temper tantrum this morning, upset because the crypto market was, in their words, was not doing what they wanted it to do in the time frame that they wanted it to do it in. Listen, very important lesson for you guys here, and I feel like some people don't listen when I say it. The market doesn't give a crap about your timeline. It's going to do what it's going to do when it's going to do it. You can either hold on, be strong, and be successful, or piss and moan, panic sell, and buy the tops later. It's really up to you, right? But the market doesn't care, right? I've had people try to threaten the markets. If it doesn't go up by next week, I'm selling everything. Market doesn't care, right? There's pump or I cut it off. What are you talking about? William, what's happening, buddy? Oh, it's hilarious. It's hilarious. Guys, there's two types of people in crypto, okay? And you really need to hear this, okay? There are two types of people in crypto. The people who are patient and hold on, and the people who, listen, the other half are more than half, 90%. They get upset, they get angry, they point fingers, they stomp their feet, they piss and moan, they whine and cry, they panic sell the bottoms, and then they come roaring back in at the tops when everything's going euphoric. They buy the tops, and then they're exit liquidity for the rest of us, right? So what you have to decide is, which investor are you at the end of the day? Only you can decide that. Are you going to get mad and stomp your feet and make angry comments and point fingers and name call and do that kind of stuff? Or are you going to sit down, shut up, come up with a strategy that works for you, whether it's DCAing, buying the bottoms, buying the dips, staking, whatever your strategy is, creating moon bags? Are you going to think it through, find a process, and be successful? It's up to you. No one can make you do either one, right? Having a self-righteous, pissy attitude and saying that everybody's wrong and it's a scam and all that kind of stuff, and blaming people, it's not going to get you anywhere. You're not going to make any money, right? So knock it off. If that's you, knock it off, right? Ty, what's happening, buddy? Good to see you. Kiz is in the house. Raul Paul's speech at the Solana conference is worth a watch. Interesting. Yeah, I watched a little bit of it. I got to watch the rest of it, but I've been so sick. Like right now, man, I could just fall asleep right now for another 8 hours. I'm so exhausted. Bruno, what's happening, brother? Bearded, how do you feel about Solana DEX on Coinbase? I think there's a lot of misunderstandings about it, right? I like it. I think it's great. I think it's fantastic. But I think it's confusing a lot of people. I'm seeing a lot of people saying that every single Solana-based network token is now going to be listed on Coinbase. That's not the case. You're just going to be able to trade on the Solana DEX, on the Solana network over on Base. That's all, right? Coinbase is not listing every single Solana token, right? I mean, I wish, but that's not the case, right? Metal Detecting England, what's happening? Are you bullish on Jasmy? Oh yeah, 100%. Metal Detecting England. What I would say is that I actually flew. I don't know if you know this, but I actually flew to Japan last month, and I had an interview with Tara, the CEO of Jasmy. CFO of Jasmy and CEO of Janction, and all of the footage is over at my editors right now. It's just getting the final touches. It's a 3 to 4 part documentary miniseries on Jasmy and Janction, and it's going to be released very, very soon. So yes, based on my conversations that I had with the CFO and CEO, I'm very bullish on Jasmy still. So yes, keep an eye out for that documentary coming out. Dave, what's up, man? What it is. Phil, if BTC hits 74K, what do you think the price of ZBEC will be? I have no way of knowing that, brother, but it will pull altcoins down a little bit lower. As far as ZBEC is concerned, your next levels to the downside are probably around 20244 and 202044. Those would be your next levels of support to the downside. So, Big Kev, good afternoon. I am locked in, just locked up 40 mil. Nice. Pico for 3 months. There you go. Pico forever. Let's go, baby. I dig it, Kev. I dig it, brother. I saw that over on the Patreon. I saw you were talking about that, my guy. Bought more ZBEC, smash the likes. There you go. Nice. Yeah, I got to put my buy alerts. I did some buying this morning. I told you guys in the morning market overview on the Patreon what my buys were. So if you didn't watch the video, I will be posting my buys over in the Patreon. I'll try to do it as soon as the stream is over. Ashley, what's going on? Do you suppose we might come down for a double bottom on ZBEC soon? Yes, I do think it's possible that we come back down and we retest 20244 area for a double bottom. I do think that, yes. That would be a great DCA opportunity, by the way. Fantastic. Not financial advice. How's it going, Bruno? Good to see you, brother. Dale, seems like the poll results was stuck in the middle with you. Absolutely. Where are we at now? Where are we at now on the poll? Still 53-47. Wow. It's a tight one. That's what she said. Let's keep rolling along here. Let's keep rolling along. Hey Rob, will Jasmine crash under 206 cents? Really sad price action. Everything has really sad price action. It's not unique to Jasmine at all. But if Bitcoin continues to move down, then yes, alts will make another leg down as well for sure. So, um, listen, over on the Patreon, guys, we've been making a plan. We've been hammering out right now. We're just DCAing for the most part into stable coins because we know there's further downside, right? If you don't have a plan in place and you're not over on the Patreon, if you don't know how to handle what's coming and what you should be doing right now, you need to be over on the Patreon, especially since it's 50% off right now, right? It's literally half the price of a cup of coffee to get the help that you need to figure out what your next move should be. Man, I don't know what to tell you if you're not willing to invest in your education. I don't know what to tell you, man. Carlos, what's up, buddy? Let's get this money. Pump it up. You got to pump it up. Metal detecting alien. I'm holding on, sat on my hands. I'm not selling my Jasmine. There you go. I love it. I dig it, brother. Praise be to God. Alts 50x from these lows when we finally take off. Hell yeah. Easily. Let's go, baby. The angry name calling, pissy attitude, selling at the bottom seems like so much fun, though. Absolutely, it does. Ditto. What's up, man? I came here, and the first thing I get told is to shut up. With love, right? Dumiria, thanks, buddy. Lions Dan, what's happening, man? You the man, and we got a plan. There you go, man. That's cool, Rob. Can't wait to see that documentary. Yeah, it's gonna be fire, man. It's gonna be fire. I'm excited about it. I haven't even seen the edited version and everything yet, so I'm excited to see it too. Alfredo, what's going on, man? Passenger, possibility of Coinbase listing ZBEC. I think I would say I'm 99.99% convinced that ZBEC will be listed on Coinbase. And one of the main reasons for that is actually that Coinbase was one of the early investors and early backers of ZBEC when they first launched, right? So it's in their best interest financially to list ZBEC eventually. So yes. Jake the Snake, by the top, sell the lows. Let's go. It's foolproof. Let's get it. Always glad to have your guidance. Absolutely, man. And your cat is absolutely adorable. Looks like my little Pico. Miria, back up the truck. Ape in further down. Everything's going to go further down. If Bitcoin does crash down to 74, which I do think it's going to do in the near term or the medium term, then alts will make another leg down as well. Yes. Hey, Rob, this is Cam from the Patreon. I live in the U.S. and I want to invest in ZBEC for long term since it's not in Coinbase yet. Which centralized exchange you think is best? Where is ZBEC listed? I think you can get it on Uphold in the States, right? Uphold has pretty good program for buying ZBEC, I think. So yeah, probably Uphold, or I mean, you can get it on. I believe you can get it on BTCC. You can get it on BTCC. They're the channel sponsor. Use BTCC to get it. You can use them in the States. Dave, what's up, man? Brother man, did you see anything with Ripple becoming a bank, or is it just bull? Yeah, we're going to cover it. We're going to cover that story in today's stream, so stick around. Jack, what's up, buddy? I knew we're not going to get a Christmas rally since you shaved Santa's beard. That's what you guys get. Yeah, I shaved the Santa rally beard. Uphold. Yeah, use BTCC, though, because they're the channel sponsor. Support the channel. Use my link down below. Create an account. We've all caught up. Time for the news. Stay strong, everyone. Absolutely. Let's get into the news here, guys. Let's dive on in. Let's see what's going on. We might as well start with the Ripple story since it was asked about it. Okay, so what do we got? Good news for Ripple, but there's a small catch. The U.S. Office of the Comptroller of the Currency, or the OCC, announced it has granted conditional approval for several large institutions operating in the digital asset sector to become national trust banks. According to OCC's statement, a total of 5 applications, including those from Fidelity Digital Asset, Paxos, and Ripple, were accepted provided they met the specified conditions. The official statement from the OCC indicated that these applications are subject to the same rigorous review and evaluation standards as all other bank licenses. Each application is examined considering its specific circumstances within the framework of the legal and regulatory criteria. The OCC has granted conditional approval to First National Digital Currency Bank and Ripple National Trust Bank for de novo National Trust Bank licenses, while approving applications for conversion from state-level trust structures to national trust banks for BitGo Bank and Trust Fidelity Digital Asset and Paxos Trust Company. These institutions will join approximately 60 national trust banks under OCC supervision if they meet the necessary requirements. U.S. Comptroller of the Currency, Jonathan V. Gould stated that the inclusion of the new candidates in the federal banking system is positive for consumers, the banking sector, and the economy. He noted that such initiatives offer consumers new products and services, increase competition, and make the financial system more dynamic and diverse. However, the banks do not want competition. That's the thing, right? He added that the OCC will continue to keep its doors open to both traditional and innovative financial services models. So the banks are pissed off at this, I guarantee you. The statement also noted that the U.S. federal banking system comprises more than 1,000 national banks and financial institutions, managing over $17 trillion in assets and exercising administrative authority over $85 trillion. It was also stated that the federal banking system accounts for approximately 67% of the banking activity in the United States. So, while they have been approved at this level, they still have to go through rigorous scrutiny to make sure that they are completely up to standards. But very good news for Ripple in the near term here. So yes, Candyman says, if anyone wants to sponsor me, I'll be running a 0.002K this weekend to raise awareness for laziness. Damn, man. Damn. I will sponsor that 100%. Very nice. Very nice. All right. What else do we have? Let's jump over to X momentarily. See what Pompliano is talking about today. The Fed is going all in on easy money once again.
All right, ladies and gentlemen, QE is back. What does that mean? It means interest rates, they're going down. We cut rates 3 times so far this year, and I think we should keep cutting them. We need to get somewhere around 2.5% in the interest rates, that federal funds rate. But also, we got a surprise. Remember Jerome Powell back on Wednesday? He got up there at his little lectern, and he said, you know what? We're going to start buying $40 billion of U.S. treasuries. We're going to do it every single month. That's a big deal because the Federal Reserve, they've been actually contracting their balance sheet. It used to be that we had a small balance sheet. Now we got a big balance sheet. They were trying to make it a little bit smaller. They were deflating it away. But now we're going back up, and we are going to start expanding the balance sheet of the government, the Federal Reserve, and the whole purpose is to get cheap capital into the market. It's called stimulus for a reason. They want to stimulate economic activity. Now what's unique is that right now, Atlanta Fed GDP is sitting somewhere between 3.5 and 3.8% growth. We're booming right now. And so we're going to stimulate into booming GDP growth. Guess what happens? We go higher. That's a big deal because that means that all the AI-related spending, remember 63% of all GDP spending right now is related to AI. Well, guess what? If we get 63% of GDP growth is related to AI and we get quantitative easing, that means that we are setting ourselves up for the golden age of innovation and for your pocketbook. And maybe that's the most interesting part, is that investors are about to do very, very well here. Stocks are going to go up. Gold's going to go up. Bitcoin's going to go up. Real estate's going to go up. The only losers in the U.S. economy going forward, in my opinion, people who are saving. 50% of Americans who just simply sit with 100% of their wealth sitting in cash, they are going to get crushed by what's about to happen. Now, QE, of course, was supposed to be a temporary program, but as we know, there is nothing more permanent than a temporary government program. So it's back. They're going to print money, drop rates. But what else is going to happen? Well, I asked my friend Jeff Park. He's the chief investment officer at ProCap Financial. Here's what.
There's nothing more permanent than a temporary government program.
What Jeff said. He thinks now that we've got cheap money coming back into the system.
As you said, the rate cut, I think, is a no-brainer. It's priced in, and Hassett has even inclinated that we should look towards accelerating those rate cuts. And we know it's basically driven mostly by the uneasy feelings we have on the labor market. And I think the labor market challenges we're seeing will probably continue in 2026. So the recent data point we have on October's jobs numbers was that there were a few things that were happening that are at some level contradictory, right? So you saw that there is new openings, more openings than before, but you also saw that people were fired more. And so you're getting more openings, but people are getting fired. And then the quits rate also is going down, which means generally people are feeling a little uneasy about quitting because they don't feel the economic security to pursue something else, and they're not going to take that risk. So all these factors point towards labor markets still being a little bit of a conundrum. And I think that's what the Fed is focused on in December, and it's going to be focused on 2026.
So there you have it. Jeff, he's way smarter than me, but he also believes it's going to be a good time for asset prices. 2026 setting up for boom times. We know that there's going to be big tax refund checks going out. Interest rates are coming down. They're going to start expanding that balance sheet again. And investors, they're just going to start warming up. Or as some would say, money printer go burr. And that means that your portfolio is going higher.
Let's do it, baby. Let's do it. Let's keep going with XRP, though. Let's keep going with the XRP stuff. Jared says, I may be late, but I'm definitely came in at a good time. Let's get these temporary government programs going, baby. Let's do it. XRP ETFs record 19 straight days of inflows totaling $954 million. We're almost at $1 billion already, guys. So the exchange-traded funds tracking XRP have maintained 19 consecutive days of positive inflows, accumulating $954 million since their launch. The products have yet to record a single day of outflows despite broader cryptocurrency market volatility that has pushed XRP's price back towards $2. What is XRP's price right now, actually? Yeah, $2 exactly. Moon Lambo, a cryptocurrency analyst and YouTube content creator, reported the XRP spot ETFs have established an uninterrupted pattern of daily inflows since their introduction to the markets. Asset managers continue acquiring XRP through their regulated products, even as broader market sentiment turns bearish. The funds have demonstrated consistent institutional and retail demand, creating a distinct investment channel separate from traditional exchange trading. The $954 million in cumulative inflows represents capital flowing exclusively into ETF vehicles rather than direct token purchases. So why does this matter? Smoke, a cryptocurrency researcher, friend of Max and Ruse, my boys, notes that the ETFs currently hold approximately 0.75% of the total XRP supply, but are drawing from a significantly smaller available pool. Only 42.87% of XRP's total supply circulates freely in the market, representing the actual liquidity inventory these funds can access. Each purchase reduces the circulating portion. Tightening available supply and institutional demand continues through the ETF channel. The funds don't need to control the majority of supply to create market pressure, according to Smoke. The impact becomes visible as ETF holdings grow relative to the limited liquid supply, rather than the total token count, potentially intensifying supply constraints and as inflows persist. So we are going to see eventually a supply and demand crunch on XRP by the looks of it, guys. looking very, very bullish. What does Lark Davis have to say over on X? The Fed is about to buy $40 billion worth of T-bonds in the next 30 days. Are we seeing QE start? But they're just not calling it QE.
The Fed says it will buy $40 billion worth of treasury bills in the next 30 days, starting on, well, today. This is incredibly big news, guys. They cut interest rates another 0.25%. Some people are saying, well, maybe Jerome Powell wasn't as bullish as he could have been. He was too hawkish. Look, the market had largely been pricing in this 25 basis point cut. That's what we got. The market was not pricing this in. Now, we shared this with you the other day. The Fed's going to buy $45 billion worth of T-bills. Watch out. Apparently the number is 40 billion. He's off by 5 billion, but our repo guru got it. You have to understand, they're not calling this quantitative easing. This is a liquidity injection. This is a form of stealth QE. When the Fed goes and buys $40 billion of bills back in the next 30 days, that brings a lot of liquidity in the market, guys. You have to understand, the Treasury's buying back, and now the Fed's buying back. The overnight repo markets are starved of liquidity, and they're injecting liquidity in there. The market is pumping the money in. At late 2022, when the markets collapsed and everything went bad, why did that happen? Well, massive excess in the system. Zero interest rates, money was dirt cheap. The Fed had injected ungodly amounts of money into the market, and that regime started to change. Okay, inflation started creeping up, so the Fed shifted its stance from a policy of easy money to a policy of hard money. When that happened, the bear market came. We are in the exact opposite situation right now. QT ended 12 days ago. This is a titanic movement happening in the plumbing of the financial system. Okay, this is not a time when risk assets tend to falter. This is a time when risk assets tend to thrive. Can this time be different? Sure, but there's a great old saying in investing, don't fight the Fed.
Don't fight the Fed, baby. Can't stop the bum rush. Let's go. All right. What else do we have? If you were not alive in the 80s, you did not get that joke at all. But Pico, look for our new video being dropped this weekend. What kind of trouble will Gary get into this time? Watch and find out. Not financial advice. Yes. The next episode of Pico and LFG drops this weekend, guys. Make sure you are subscribed to the Not Financially Advised YouTube channel, or you're going to miss the latest episode. Futures liquidated a staggering 119 million wiped out in one volatile hour. Let's talk about it. The cryptocurrency market just experienced a brutal hour of reckoning. Data from major exchanges reveals a staggering $119 million worth of futures liquidated in a mere 60 minutes. This intense volatility serves as a powerful reminder of the high-stakes nature of leverage trading for traders and investors alike. Understanding these futures liquidated events is crucial to navigating the market's turbulent waters. When we talk about futures being liquidated, we're referring to the forced closure of leveraged positions. Essentially, exchanges automatically sell the trader's assets when their position losses are too much value to cover the initial borrowing funds. So you borrow, right, and then your losses, you're in the red by too much on your open trade. They force close your trade for you. The past hour saw this happen on a massive scale, totaling $119 million. Therefore, this isn't just a statistic. It represents significant instant financial loss for thousands of traders who bet incorrectly on the market's direction. Such a concentrated wave of futures liquidated is typically the result of a sharp, unexpected price move. Let's break down the common triggers. Leverage overload means traders using high leverage, like 10 to 20x, are highly vulnerable. A small price swing against their position could trigger a liquidation. Cascading effects. Initial liquidations can force more selling, pushing the price further and triggering even more liquidations in a domino effect, which is what we call a short squeeze or a long squeeze, right? Market sentiment shifts, sudden news like something from Trump putting 100% tariffs on China or something like that can also cause a cascade effect where people start the price to drop, longs get liquidated, which causes the price to drop further, which liquidates more longs, right? So watching $119 million vanish is a sobering lesson. However, you can implement strategies to protect your capital first. Manage your risk by using sensible leverage. Lower leverage means a larger price buffer before liquidation. Second, always use stop loss orders. These automatically exit your trade at a predetermined price, helping you avoid a forced liquidation. And finally, stay informed. Monitor funding rates. Don't try to set it and forget it. Doesn't work that way, right? You know how many times I've had people come to me and say, man, I was up like $300 on my trade before I went to bed last night, and I figured I'd wake up and I would be in even more profit. So I left the trade open. I woke up and I got liquidated when I was sleeping, right? It sucks. It happens all the time, but it sucks. Guys, always use risk management, not financial advice. Just be careful out there, right? If you want to learn how to trade properly, guys, again, join our trading group over on the Patreon. We have demo mode over there where you can get in on our trades, but not risking your own money. So you can use fake money to trade so you can gain experience, right? And learn how to do it. And then when you're ready, you can step it up to using your actual money. It's a great way to learn how to do this properly, guys. So we drop like 4 trades a day over there. You can get in on them. And you can see how to do everything. You can learn how to long, how to short, all that kind of stuff without putting your own money at risk. And you know what? You might decide trading's not for me, right? And you didn't risk any of your own money. It's a win-win. So check it out, guys. Join our trading group today. The link is in the chat. It's 50% off right now, too. The Russell and the M2 both at all-time highs today. Bullish. Yes, absolutely correct. Jared, I learned my lesson with a forced liquidation really sucked, but we talk and teach these things over in our awesome group. Yes, exactly. Exactly. All right, let's go over to Squawk Box, guys. We haven't jumped over to Squawk Box yet this morning. Chicago Fed Goolsbee uncomfortable with front-loading rate cuts, assuming inflation is transitory. Well, inflation is not transitory. It hasn't been. Why are we still saying that?
I want to get over to Steve Leisman. He is at the Chicago Fed Economic Outlook Symposium this week.
Panda Watch.
President Austin Goolsbee. Steve, take it away.
Hey, good morning, Becky, and thank you. Just before I go, I start here. Jeff Schmidt, the Kansas City Fed president, another dissenter, out with a statement at this hour saying the reason he dissented, inflation is too high, the economy showed continued momentum, and the labor market, he says, is largely imbalanced. So we could talk about all that with Austin Goolsbee, professor, president, and now dissenter. That's another moniker we have for you now.
Indeed. Welcome, though, Steve, to the beating heart of the Federal Reserve System.
Are you kidding me? What a beautiful place. So let's talk about the dissent and why you decided. I guess this is your last vote until the next cycle comes around for you. Why was it important for you to vote against the rate cut?
Well, look, Steve, you know I've been saying for months, I'm pretty optimistic that for 2026, rates will be able to be a fair bit lower than they are today. But I've just been uncomfortable front loading too many rate cuts and assuming that what we've seen in inflation be transitory. It's all amplified by the data being shut down. And so I just felt that we ought to wait, that we don't lose a lot. We don't take a lot of extra risk, in my view, to just wait to Q1 2026 and make sure that we're back on path to 2% inflation.
The big pushback here, though, comes from the job market data that we do have, which suggests that the labor market is weakening pretty substantially.
I don't know that I see it exactly the same way, in that most of the measures of the job market have been pretty stable. And the chance that things in the job market would fall apart rapidly within 1 to 2 months before we would revisit this again feel relatively low. We're in this environment where anything measured in rates, like the unemployment rate, the layoff rate, the vacancy rate, et cetera, those have shown stability. Where you've seen the number fall off has been raw aggregate monthly payroll, but that's the one with the biggest question mark because of immigration, because of retirements, we don't know what the break even is. So as we look at an environment that's been characterized, I would say, as this low hiring, low firing,
Right.
it's worth remembering that's not what the business cycle looks like. You have low hiring, high layoffs, or you have low layoffs, high hiring. For both to be low at the same time, to me, that says more like uncertainty than it does slowdown.
So it could pick up, you think, on the backside. Before you answer that, though, you have to deal. I'd like you to answer this issue with Fed Chair Powell, who said that when you figure in what could be revisions, the really substantial revisions to the job numbers, you could be minus now.
You could. The only thing is we don't know what the break even is on the monthly payroll. And we saw in 2023 and in 2024 on the inverse side, we're getting these big numbers. And there were a number of people saying, how could the economy not be overheating if we're getting 150, 180,000 jobs a month? And the answer was, that's a false reading of where you are in the business cycle because the break even was higher. So I think looking at these rates is a more effective way to figure out where you are in the business cycle. And they've been basically stable, cooling mildly. The hiring rate is low, but the layoff rate is also low.
But they're just putting up, Austin, to your right there. There's the unemployment rate. It's ticking up. You were at 4. When was that? Back the beginning of the year. And then, guys, we're looking at it right now. It ticks up to 440, 40 basis points.
Okay.
Who says you know where this stops?
We don't, and that's my only point. Like I say, I am not hawkish on rates for next year. I think that we make progress and that by the end of next year, if you look at the dot plot, I'm one of the most optimistic folks about how rates can go down in the coming year. I'm just uncomfortable with front loading the rate cuts, assuming all of the inflation that we've seen be transitory. There's no way around. We've been 4.5 years above the inflation target. And the last 6 months have shown no progress. And right before the lights went out, you saw a couple of relatively disturbing readings on services inflation. I just want to make sure that if we believe that this is transitory, let's not just put all our eggs in the
So I have not been
transitory
sent here from New York, Austin, to get you with the program. But let me tell you what the program is.
Okay.
The program is you got these tariffs on. They're coming off next year. Inflation's going to fall. Don't you worry your pretty little head about inflation.
That's what I want. I want to not be worried about it.
Is that what's wrong with that theory?
There's nothing wrong with the theory. I
Now.
just want some evidence that that is in fact happening, because that's disturbingly sounds like exactly the argument of 2021. It's about to go away.
Transitory.
Team transitory. And there were many of us, private sector, I wasn't in the Fed then, but Fed, private sector, academics, buying that logic. If you look at the forecast, if you believe that the inflation is coming primarily from tariffs and it's going to roll off and be transitory, that is supposed to start showing up in the data in Q1 of 2026. As long as we get some data showing that, as I say, I'm one of the most optimistic people for 1 year from now, how far rates
Where are you
go
1 year
down.
from now?
Look, I don't, the dots are anonymous for a reason, but I'm more than the median in optimism.
For 26.
For 26, for the end of 26.
Okay. So one other argument that's out there, and I asked Chair Powell about this, was this idea that, hey, you have this, it was interesting, they raised the growth forecast. They didn't really lower the unemployment rate, and they lowered the inflation rate a little bit. Tells me that there's a productivity thing happening there.
Well, look, we've been noting the productivity, that there's been strong productivity growth, but I took from the forecast, not just coming out of the dot plot, but if you look at the private sector too, they view the unemployment rate in the coming year to not be much higher than it is right now, that it's
true.
pretty stable. And so that's why I just want to get evidence that inflation is going to be temporary. Because as I say, before the lights went out and we stopped getting official data, there were some disturbing readings on services. And as you know, services is historically a much more persistent type of inflation and is not likely caused by tariffs. So let's just make sure when the lights go out, let's just wait a second. I always say, I have only ever aspired to be one of the data dogs. And the first rule of the data dogs is there's a time for walking and a time for sniffing. And we need to figure out the difference of those. And when there's no data, that's the time for sniffing.
Let's leave the building and the ivory tower and talk about what we're hearing from the American public, which is that they're really having trouble with prices right now. How does that
look?
You're thinking about policy.
As you know, I travel around and talk to everybody here, heart of the Midwest. The district in Chicago is Iowa, Indiana, Michigan, Wisconsin, Illinois. At the least, prices are one of the main factors, concerns that both businesses and consumers have about the economy right now. So that's why we can't ignore that inflation's been above the target for 4.5 years and it's rising. Let's just I do have some confidence that it will come down, and a year from now, rates can be lower. I'm just uneasy with front loading because of that.
Becky, go ahead.
First of all, Austin, you never fail to disappoint. I love your analogy. I just wonder, what are the dogs
I never
sniffing?
fail to disappoint.
You never disappoint, I should say. You never fail to keep us interested. I misspoke. You never fail to impress. That's right. What are the dogs sniffing, first of all? Second of all,
what are the dogs sniffing?
Yeah. Where?
Look, sniff the data. Sniff everything that hits the floor. It might be food. You know, that's the other rule.
That too. Okay, let's talk a little bit more broadly about the Fed. You all made the early move to reappoint a lot of these Fed presidents yesterday, and that kind of cut off some concern people had about whether the Trump administration was going to get more hands-on with moving the Fed around, maybe trying to replace some of the presidents that are there. Do you feel like the Fed is trying to prepare for an onslaught coming from the Trump administration?
I don't think so. I've been on the Fed on the FOMC for about 3 years, and I'm struck, and you can see in the minutes, and you'll see when the transcripts come out, and you can read word for word, the way the interest rate decisions are made have nothing to do with anything other than the economic outlook and the economic data. People take the job extremely seriously. It's not a partisan, you're out of the elections business. That people take the job seriously, that's fundamental to Fed independence. And I think everybody understands how important Fed independence is.
Austin, you told me before we went on air that, in fact, and I may have this wrong yesterday, the vote took place just at the same time it always takes place. It was when it was announced earlier.
I think that's true.
Okay.
My understanding, I wasn't here 5 years ago,
right.
But the way I had heard it, there was a vote in December. It was announced in January, and the official appointment is at the March 1.
I mean, there's no doubt it was sort of an end run on some possible, you don't have to say this, but it seems like an end run on some possible influencing or changing that the president might have had if he had the majority on the Federal Reserve Board. But if it's the same timing, then it's only a matter of announcing it rather than actually.
That's my impression.
Okay.
I know the process is a very robust process. We had to submit a lot of documents. What have you done? What are your successes? What are your weaknesses? How each of the banks has
And
been
did you say your
operating.
problem is you care too much when let's talk about the Fed balance sheet, which seems to be influencing markets these days. You guys made a decision, as far as I can tell, earlier than the market expected to come back into the market and larger than expected. Why isn't this new $40 billion of purchase of bills? Why is that not QE?
Why is it?
Question.
This is a technical adjustment. It's not QE because the intention of doing this is just to allow rate control. It's not to try to influence monetary policy. We're not at the lower bound. You'll remember the QE was about trying to do monetary policy when you can't.
So we're basically doing QE stuff, but we're calling it not QE. Okay, that's fine, because guess what? The result is the same. Liquidity in the system.
Can't adjust the interest rate, and this has
But you are
nothing to do.
growing the balance sheet, right?
We are growing the balance sheet, but as I say, the balance sheet, when you're operating in an ample reserves regime, is supposed to be a share of something, a share of bank deposits, a share of GDP. So over time, it's got to be growing. The timing of that, in this case, I think is just a technical adjustment. You've seen, if you go look in repo markets, felt like we're getting pretty close to the point where they're not ample. And if reserves are not ample, we're not going to be able to set the rates how we need to set them.
Mike Santoli has a question.
Yeah, Austin, a couple times you've referred to some of the inflation data we got before the data stopped as disturbing on services inflation, things like that. Have you taken any comfort in the market signals about how it feels about inflation, whether it's market implied inflation expectations or even longer term treasury yields, which have not really broken out of a range?
Yeah, I take a little comfort that it's an important issue to raise, that these market-based measures of inflation expectations, let's call it in the near term, have looked better than the survey measures when they ask consumers. And I do take some comfort in that. And that's part of why, as I say, I'm optimistic that a year from now, rates can be a fair bit lower than where they are right now, if the path of inflation goes how we want it to go and how people anticipate, that it will be transitory, that what we've seen will go up and then come down. And when it's supposed to start coming down, it's supposed to be detectable, observable in Q1 of 2026. So I don't view that there's that high of a risk of just waiting a very little bit to make sure that inflation is starting to come down.
Austin, we have to go, but a real quick question, because we're going to get a lot of data next week. What's your sort of upper tolerance for the unemployment rate? Where does it start to get worrisome to you?
Look, it's always worrisome whenever it's rising.
Yeah.
It's been rising a little bit. It's been rising gradually. If the unemployment rate is 4.5 or under and stays there stably, as long as it's coupled with some of these other rates, the vacancy rate, the hiring rate.
Okay, so it's only 0.10 from where he says, right? So if it goes up to 4.5 next month, is he going to change his target? Is he going to move the goalpost kind of thing?
The layoff rate, if those show stability, we're not in the space that I'm.
But Waller
that
says that
adjusting
hey, the unemployment rate or the job market, the way it looks now, is not going to be a source of inflation. So that's the reason why he's not worried about it.
I'm only allowed to speak from my own views.
Yeah, I'm just throwing out another view that's.
I'm friends
prevalent.
with Governor Waller, and I respect him quite a lot. So when he says things, I go analyze it. My read of the data, and we've got Chicago Fed research that backs it up, is wages are stickier than prices. So when things happen in the economy, you tend to see the prices go up first or go down first, and then that is followed by the wages. Wages are not a great leading indicator of prices. So I'm a little wary of over concluding from wage growth what you think is going to happen.
Kind of sound like he was talking out of both sides of his mouth there for the most part. Candyman says, don't annoy Rob this week, because if you do, he will give your number to all the kids and tell them it's Santa's hotline. 100% I will. Don't push me, man. Don't push me. Danny, I'm stealing that quote. That lady sounds like my wife. You never fail to disappoint. Yeah, it's a tool bag. She was right the first time. Yeah. You never fail to disappoint. Yep. So yeah, I am seeing this. Like I said, if we lose about 89.2, we're probably going to come down. I mean, we could test somewhere in the range of 86.3. The final support's going to be around that 84.650-ish, 84.6. So we'll have a little bit of choppiness, but I do think we're coming down here into this golden pocket, or at least close to it, around 74K. So that's what I'm watching for, guys. I'm waiting for that drop. Waiting. But for now, I got some coaching calls to do. Get over to the Patreon, guys. I will be dropping more trades over there today. 50% off for the holiday season. Don't miss it, guys. Lock it in now. It's less than half of a price of a cup of coffee. Are you kidding me right now? Check it out. The link is down below. It's in the chat. It's in the pinned comments. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.